Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Carmagnac's Michael Hume. Hi, Michael.
Hi, Emma.
So we're here today to talk about commodities. That's your bag. I thought we'd start with that headline-grabbing commodity, gold. Gold has hit the headlines this week because $2.3 billion worth of gold ETFs have been sold as gold hit a 5-year low. How much further can gold go, and should we care?
Two very interesting questions. Yes, gold has certainly lost some of its luster recently, and I guess many people will be asking the question: Is it foolish to invest in gold? I think gold still has a place in portfolios. I think gold, in particular, has a place in high net worth individuals' portfolios, and I think there are several reasons for that. Gold is really an insurance policy against systemic risk in the financial system. Now, while it's been nearly 7 years since the last meltdown, given the jitters we've seen in China recently and the ongoing concerns about leverage and creditworthiness globally, I still think gold has a role to play as a modicum of insurance policy. I think that's compounded by the fact that although we've seen a lot of sales of gold, actually, if you look at China recently, over the last several years, they've actually been increasing their stocks of gold and adding to them over time. And I think the prudent investor, while you can make a case for saying gold is actually only worth as much as anyone thinks it should be worth, but the prudent investor might take heed of the fact that what the Chinese are doing, yes, they're devaluing, and to a certain extent that's exporting deflation. But actually overall across the world, what we're seeing is a series of competitive devaluations. And ultimately they're inflationary in terms of fiat currency. And so what we'll see over time, I think, there's a reasonable chance that we'll see inflationary risks rising across the spectrum. There's also risks, obviously, of a more systemic nature. And in that context, I think, certainly from a technical perspective, gold looks quite intriguing here.
And then perhaps from the precious metal to black gold, it's been more than a year since the oil price started to tumble. Where do we go from here?
Well, I think patience is the word, really. I think when we last spoke, I may have mentioned that it's going to take time for this to run through the system. I think many analysts have been overly optimistic about production correcting in the US, that excess growth from the shales. It's taking really a longer amount of time than most people realized, and that's because productivity gains have been made and improvements have been made, and you can do a lot more with fewer rigs. Now, I think that will run its course, and ultimately, it is a relatively finite resource, the shale, confined to relatively small pockets of Texas and North Dakota, where you've seen the great growth over recent years. And it's going to be probably another 6 months before we really see major declines in those basins. At the same time, I think what analysts have taken their eyes off is really the deferral of major projects outside the US, big offshore projects. And that really takes time to impact the supply cycle, because you've got a sort of a rolling production line of these projects, and they all have 6 or 7 years of maturation phase. So we're still seeing incremental production from historic projects. In terms of new projects, it's really going to be next year where we see the fall off occur. Finally, Emma, I think eyes are on OPEC, because obviously we're almost a year into the Saudi policy of increasing market share. Saudi is producing at an expanded rate. They're obviously cognizant of the challenges, not just of the US shale, but also of their rivalry with their neighbor Iran and the potential from production from Iran. Notwithstanding that, I think we may start to see changes to Saudi policy in the coming months. Some rumors of the pending retirement of Al-Naimi. Will we then see perhaps a slight adjustment to the market share at any price policy? I think it's possible. Saudi has generally been relatively agnostic in the last year about prices at or above $60, but if prices remain below 60 for a considerable amount of time, I would expect them to act, not necessarily blowing trumpets at the same time, but still see some changes.
So watch this space.
Exactly. Just stay patient and take heed of potential valuation upsides in many of the names that we look at.
Michael, thank you very much.
Thanks, Emma.
This is Emma Wall from Morningstar. Thank you for watching.